What's up, Wolverines? My name's Andrew Candela.
And I'm Otto Espino.
Welcome to The Exchange. So we have a great show today. Stay tuned because later on we'll be talking to a Belen alum, EJ Coscuela, who is a commodities trader.
All right, Andrew, tell me about the national and global markets. What's going on?
All right, so the Dow is down 0.72%, S&P down 0.69%, NASDAQ down 0.6%, and the VIX is up 6.87%.
Yep.
So the global markets, the London Stock Exchange is up 0.72%, and the Hong Kong Stock Exchange is up 1.96%.
So yeah, U.S. ain't looking too pretty.
Yeah. All right, so let's get into the biggest headlines.
All right, so as many of you know, today was Columbus Day, so we had a bit of lighter volume. Not to mention West Texas Intermediate crude oil soared from $1.58 to $80.93.
Wait, a dollar from $80.
Yeah, that much of an it was an absolute explosion.
Absolutely crazy.
A bunch of oil companies were sent soaring today, and also another thing, Chevron Corp announced it would target zero net emissions for upstream gas emissions by 2050.
Yeah, that's
so
huge.
we've talked a lot about sustainability, and it's really good to see that these companies are taking it seriously.
Yeah.
Also, really bad news: Southwest Airlines has been blamed for air traffic control problems, which led to over 1,600 flights being canceled over the weekend.
A lot of people complained that their flights got canceled.
Yeah, a lot of vacations ruined.
Yeah.
So tell me about Bitcoin. What happened with that?
Yeah, so Bitcoin climbed over above 57,000. You know,
Good news.
a lot of people in El Salvador are happier because it plummeted the last couple weeks or the last week.
Yeah, it's been red for a while now.
Yeah, and you know, since Bitcoin is their currency now, they're happy that it finally is going up.
Yeah, definitely. All right, so future outlook. We have a lot of really important earnings this week, specifically with the financial sector. To start off, Wednesday, we have JP Morgan. Everybody knows about JP Morgan, BlackRock, and First Republic Bank. Also, on Thursday, Bank of America, Citigroup, Morgan Stanley, and Wells Fargo.
A lot of
report
banks.
earnings.
A lot of banks.
Yeah, but this is going to be a really serious and going to determine, a lot of the sentiment. I know today, it wasn't too pretty for a lot of these banks, but hopefully in the coming weeks, their good earnings will provide, a little bit of green to the market. And then lastly, Friday, Goldman Sachs will also be reporting earnings.
Another big bank.
Yep. All right. So.
All right. So the stock market isn't the only market in the U.S. You know, you have bonds, you have real estate, cryptocurrency, and you have the commodities market. And to talk to us more about the commodities market, we have EJ Coscuela, who's from the class of 2014, and who I think is a legend, if
For
you
sure.
could say. All right. So thanks, EJ, for taking the time to be with us today.
Thank you guys for inviting me. I'm really enjoying the WBLN segment.
All right. So EJ, we know a stockbroker buys and sells stocks, and as a commodities trader, what do you do, basically?
So take a step back to understand my position as a commodities trader. There are really three main positions that you can have in my industry. One is you can be a physical commodities trader, which is essentially what I am, which is I use the market as a way to hedge my positions. And I buy and sell physical sugar. In my position, it's sugar or physical commodities in general, from suppliers and to end users. We can use the market as a speculative hedge, or a speculative play, or we can hedge our positions against the market.
Right.
There's also commodities brokers, which is essentially a stockbroker for commodities, that they buy and sell commodities or futures commodities on behalf of a client. And then I would say lastly is the funds, the speculative funds, who essentially just paper trade on commodities, which is similar to a JP Morgan investment buying and selling a stock.
So you specifically,
those are the three main points.
Trade sugar.
I personally trade sugar. That is my commodity.
All right.
And that typically when you're a physical trader, you focus in on one commodity as you become an expert in that.
All right. So with stocks, you can buy stocks on a stock brokerage. Yeah, of course. Where do you trade these commodities? Like, is there a brokerage that you can trade these commodities in, or where do you trade these commodities?
Exactly. I trade personally on the Intercontinental Exchange. It's called ICE, and this is namely for futures contracts. We trade, or through ICE, traded. The majority are agricultural commodities, energy commodities, hard commodities, financial products at times. but primarily this is a commodities exchange.
All right. So, what is the commodity market looking right now in your opinion? So right now, is it strong or how's it looking?
So there, I could break it into a few things. I would say generally first, very constructive, very bullish on commodities. This is primarily due to the pandemic. Initially, when the pandemic first hit, countries were closed down. People stopped heading out. Consumer spending was low for certain places. So supply chains were broken. Large industries, they laid off a lot of their workforce, and demand was weak. Until recently, after the Delta variant, countries have been opening up. Travel has been expansive. There's just been a lot of demand for every commodity at the moment. So now the lag of supply trying to catch up with the demand is clearly not enough. And this is sending commodities soaring. If we want to focus in on energy, as you guys touched earlier, the $1, there was a point that it was at negative. There were essentially Chevron would have been giving you oil, and they would be paying you to receive it because they didn't have any space. So commodities, I guess it's important to mention, purely driven. The price is purely driven on supply and demand metrics. A little different from the stock market. And say about the sugar market, when the pandemic first struck, just like most commodities, there was very low demand for it. Usually sugar is driven by, let's say, extravagant spending, disposable income, going to cafes, getting coffee, getting dessert. People weren't doing this as much. But specifically China, they front-loaded. Essentially, they bought excessive amounts of sugar, brought it into their country, hoping to, have less exposure in the future if there was a drought in sugar. And this just amplified everything. Everyone had this sort of mania, and they went on a buying spree. And that has really risen the prices as well. Sugar is at almost all-time highs, and similar to energy. If we want to talk about metals as well, there is an important inflection point right now about the new investment into the green economy. Electric vehicles, solar panels, all these require certain metals, and this is also driving prices up. So all the way through, it looks very constructive, and it's pretty evident. I think it was one of the highest performing asset classes of the year.
Wow. Impressive. All right, so EJ, how does the commodities market affect the economy overall?
If you look at it from a very simple point of view, commodities are the basic raw materials that fuel life necessities. Oils, grains, natural gas, wheat, sugar. So I think maybe you've heard recently about the CPI index, Consumer Price Index. That has risen. Essentially, that's inflation of these goods. So that was mainly in part, driven by the rise in commodity prices. So commodity prices rose. Once they got to the final end user, it became much more expensive. And that's something we're seeing all throughout today. If you go to your local gas station, you're going to see prices probably jumped $1 in the past year. And then secondly, it's a leading indicator of inflation, which goes off of what I said in the last point. So it's important to follow commodities to see where the market is as a whole as well.
All right, let me ask you this, because I know the pandemic affected a lot of companies in a terrible way, in a bad way. A lot of companies had to shut down, and the market took went down.
Nosedive.
It was a nosedive, right. How has the pandemic affected the commodities market?
I would say, similar to equities, but it's been one ride of a year. As we said, we touched on oil going from negative to the highest since, I think, 2014. And this isn't expected to slow down any which way. Gold increased in value. This is primarily because it's a flight to safety for investors. Once there's some level of uncertainty in the market, investors usually pile into gold as it's a store of value, similar to Bitcoin, as people call it the digital gold now. Disruptions to food chain, to food supply chains affected all agricultural commodities. Price of lumber skyrocketed. 300% because there was so many, home renovations being done, and no one foresaw this. The lumber was not there, so that caused massive disruptions as well. And it's still today, we're unsure on what the consumption and what the supply is for a lot of commodities, and the pandemic really exacerbated all this.
All right, and EJ, are there any spikes and volatility in this market?
Yes, so this is something that it's a little different from the equities market. I believe that commodities are the most volatile, but they are typically range bound, which means they stay within a certain range of prices. If you think of a good stock, say Amazon, that price can, in theory, be ever rising. Commodities, it's instead of a good stock, it's a commodity in great demand, and how that will naturally progress is if it's in demand, probably for a year prices will rise, but in turn, suppliers somewhere or country somewhere will start to meet that supply, and they will fill it, and at that point, the commodity price will sink. It's essentially the invisible hand effect. It will always stay within a range, unless it's the commodity super cycle, which I can touch on later. And they're typically, since they're cyclical, meaning the commodity market is cyclical, meaning that if you think about how corn is grown, there's certain crops throughout the year. So when the crop runs out, that typically means the price will be at a higher point of that month. People will be paying more because there's not much of it. And that for that reason, it's very trend driven. So it's a different way of trading, very different way. Commodity super cycle, which I mentioned, it's a period in which people believe that it's going to be a decade-long boom in a certain commodity, which is what the funds have been predicting, and that's why the funds entered in earlier this year, and they've done a very good job. I think that this talk is now specific to the metals, the ones going to electric vehicles, to solar panels, because that's where the investment is flowing into nowadays.
All right.
Thank you, EJ. I think it's time to wrap up.
Yeah.
So, in the wise words of Warren Buffett, first rule of trading is to not lose money, and the second rule of trading is to never forget rule number 1.
That's right. Thank you for watching The Exchange, and stay tuned for the next episode.